Okay, I think we resume now. Let's go back to our slides. Okay. Let's put the slides.
Which of the slides, sir?
The candlestick.
Okay.
We are going to continue from Bollinger Band. Okay, we are waiting. Are you sure? Okay. Okay, we continue to the next two. Before the break for our morning session, we are able to take Bollinger Band. Now the next tool is Commodity Channel Index. Commodity Channel Index. CCI. Commodity Channel Index, known as CCI. The Commodity Channel Index is a technical indicator developed by Donald Lambert in 1980. It shows when the market is overbought, resold, and helps to access the direction and strength of a trend as well as discover new trends. Okay. CCI measures the difference between the historical average price and the current price. The indicator oscillates across a center line. It goes up and down between a central line. When it is above zero, it means that the price is above the historical average. And when it is below zero, the price is below the historical average. Then in between, above and below the zero line, above it we have the 100 line, and below it we have the minus 100 line. So these are the three important lines in CCI: the zero line, the 100 line, and the minus 100 line. Let's take the 100 line. What does it say? If the indicator rise above 100, it means the pair is overbought and the possibility of a downward correction has increased. While when it is above zero, it means that the price is above the historical average, and when it is below zero, the price is below the historical average. The minus 100 line now. When CCI reverses down from positive or near zero readings and make its way to minus 100, it points to an emerging downtrend. A decline below minus 100 means the downtrend has been strong and the market became oversold. Now let's see buy signal in CCI. Buy signal is found as soon as the market trend is found above 100. As soon as it crossed 100, go above 100, you have a buy. And then a sell signal as soon as it crossed the minus 100 line going down, you have a sell signal. As simple as that. Buy signal is found above plus 100, while sell signal is found below minus 100 line. CCI is good at showing sentiment of market, wisdom of the crowd. CCI is good if you combine it with another tool, meaning CCI is not a standalone tool. You can never rely on it absolutely. Later in this material, we are going to see the analysis of all these tools. Where are they weak and where are they good? How accurate are they? Hopefully, if we can do it, maybe it will be in the late evening class. But if our speed didn't reach that stage, maybe we'll do it next class. CCI never take position solely. You should never, you as a trader, You should never take position solely based on CCI because it's not a standalone tool. Use another tool to confirm CCI, and CCI is always good for short-term trading. If you are a long-term trader, swing and position, CCI will not be good for you. That's why me, I never use even CCI. I'm a swing trader. But if you are scalping or you are a day trader, it will go for you. That's CCI. We need to go and, do you need to go and practicalize, or I leave you on your own? On your own or together? Okay, so let's go to our eToro. Let's go to our eToro. Okay, have you shared it? It's not here. Okay. So let's pick USD CHL. CHL. Let's go to the chart. Okay, we remove Bollinger Bands and we apply CCI. As usual, we go to our tools and then we will find it under study 1. Under studies 1. We look for commodity channel index. Commodity channel index is there. Then you create. So look at it. The current reading is shown in the black square. What is the current CCI reading? Look at the black square. What's the current reading? Minus 99. So minus 99 is heading toward sale. Is this sale? It's heading towards sale. Because once it crosses minus 100, you have a sale. So it's heading toward sale. So if you already have this item, you will just wait for small amount of time and you sell it. So let's pick AUD USD. Okay, what is the CCI number? Plus 189. The buy signal has already took effect some days back. So buy signal has already took effect. That is why you remember we bought this yesterday, Friday, in the morning, and some of us even sold it in the afternoon or evening time. So let's try Looney. Let's try Looney. Minus 148, which means it was due for sale many days back. It was due for sale according to CCI, because minus 100 is for sale and is above minus 100 now. It's already due for sale. So is there any question on how to use CCI? Okay. Okay. Whether to buy it. Okay. Or that's when you look for another item or you wait for some time. Like this one now, we have seen that the sell signal was issued many days back. In case you are looking for buy, you have to wait for some days to come. Then the signal will not switch and come to buying. Or instead of waiting, you can look for another item. Except that is your favorite item. Are we clear? Okay. Any other question? So can we go back to our slide to take another tool? The next tool is the moving average. Moving average is simply just one line. It's just a line drawn on your candlestick, as simple as that. Now, if the market closes above the moving average, then a buy signal emerges. What we are trying to say is, when the candlesticks are below the moving average, the first candlestick that closes on top of the moving average, you are having a buy signal. So if we have the first candlesticks that cross above the moving average, if it is a green candlesticks, automatically you are having a buy signal because candlestick close on the top. Are we getting it? But where it is a red candlestick that cross halfway, you do not have a signal because it still crossed below the moving average. So the point is, the candlestick must be below the moving average line. Then the first candlestick that close its price above the moving average, you have a buy signal. And then you will have a sell signal when if you're having the candlesticks above the moving average, then the first candlestick that closed below the moving average, you're having a sell signal. So normally, if they are above the moving average and you have a red candlestick crossing halfway, you're having a sell signal because the red candlestick closed below. But where you're having a red candlestick crossing below halfway, it's not a sell signal because it closed still above the average line. Are we getting it? Good.
No, sir.
Okay, Mamana?
No, sir.
Okay.
Yes,
what I'm
sir.
saying, this moving average line you can see is the red line on the screen. Can you see it?
Yes.
And you can see the candlesticks. And sometimes the candlestick will be below the
Yes.
line, and sometimes the candlestick will be above the line. So look at,
Yes, sir.
at the area where the candlesticks are below the moving average line. Can you see the place?
Yes, sir.
So the first candlestick
By
that will
the
come,
left.
yes, the first candlestick that will come and cross above the moving average line, you are having a buy signal. And I say the candlestick must have its price close above before it will become a buy signal. And you remember green candlestick,
Yes.
they close above, while red candlestick
Yes,
close
sir.
below. So if it is a green candlestick
Below.
that cross halfway, it gives you a buy signal. Are you getting
Okay,
it?
sir.
Now look at this area where the candlesticks are above the moving average line. At this place. So the
Yes.
first candlestick that will now
Yes.
come and cross the moving average line and come below, you're having a sell signal. And for that to be effective, the candlestick that cross must close its price below, meaning it must either be, if it is halfway, it must be a red candlestick. Are we getting it?
Okay.
Yes, we understand better
Yes,
when we
sir.
practicalize. Next slide.
Okay.
Uh-huh. Okay, now let's go and practicalize moving average. Let's go to our eToro. Let's go to our eToro.
Which market are you using, sir?
You say? Okay, let's use cocoa. Are you there? But it's not shakes. Okay, we look for moving averages in studies 2, sorry. Now look at the moving average. What do we have currently? Can somebody tell me what are we having on cocoa currently? There is a signal.
Yes, sell signal.
Okay, somebody sells signal. Do you agree? Yes. Look at the candlestick, the red candlestick. The first one that the moving average cross it. Before it, the candlestick are above. And then it is the first that crossed the candlestick and closed below it. Therefore, we have a sell signal. Put your channel, let us see the date that we have that sell signal.
That is screen.
Hello, Mama?
The screen is not shared on my side.
Haba, but it's shared here. Try and refresh.
Okay, sir.
Not this one, Fatima. The other candlestick before it is where we have the signal. Not the small red candlestick, the long one. Yes, it's the long one that we have the sell signal.
It was on 13th October.
13th October. That was the time we have the sell signal on cocoa. And now we are waiting for the buy signal to come in days to come. Are we clear? Let's go to silver. Let's try silver. Are you seeing it now, Mamana?
No, sir.
You refresh?
Yes, sir.
It should be your network, I think, because we are seeing it here now.
It's raining. It is raining.
Oh, that is why.
Yes.
That is why. But can you try the YouTube again?
Okay, sir.
Did you click on the link or you copy the link?
I clicked on it.
No, copy it because there are some item that is not highlighted as a link. Try and copy the link. You will start from let me see. Or let me type it here for you.
Okay, sir.
This is the complete link. You will see the link on the screen. I type it for you.
Okay, sir.
Okay, silver. Now you will tell us what do you see on silver regarding moving average. Silver?
Buy.
Good. Look at the time for buy. Check. If it is not too far, we buy it now. Check.
It was on 14 October.
And 14 October is not far.
It's late Thursday.
It's Thursday, ba? We can still buy now. So those interested, buy silver. Mamana, buy silver. Buy silver, please. But Zimbabwe is not interested in silver. That's why she's not buying. She knows what silver has done for them. Now let's try aluminium. Yes. Did you share it? I didn't see it. So what is the result for aluminium? No signal. Okay. Let's try copper. There is what? 8 is a little far now. 8 is far. What happened? Okay, so let's go back to our slide. Okay, have we done that on the copper?
Yes.
Okay, so let's go back to our slide and continue. Let's go to the slide and we continue. We go to the next tool, which is RSI. Are we there?
Yes.
But on the screen, we are not yet there. Okay, let me see whether I can open my own and share. Is your own back, Fatima? My own is not sharing. You are back. Okay. Is it sharing? Okay. I think what will happen, we are going to take 2 or 3 tools before we go and practicalize. Since switching from the PowerPoint to our this thing is giving us technical issue. We will take 3 to 4 tools now. Then we go and practicalize them. So RSI now. RSI stands for Relative Strength Index. It's very similar to stochastic that you learned before. RSI helps tell when an asset is being redeemed or resold. For RSI, you should monitor level 70 and level 30. Just like our stochastic. If RSI rise above 70, it means there is overbuying and you have to sell your assets. If the RSI falls below 30 line, the asset is resold and may move to a higher level and you are supposed to buy. So in other words, in RSI, you get a sell signal above 70 from 71. And you get a buy signal below 30. That should be 29. Are we getting it? Good. Now let's take a look at the RSI on the screen. The candlestick is on the top. Look at your RSI below in red colors, showing you how the market has been going up and down. So there is line on top, which is the 70 line, and there is line on the bottom, which is the 30 line. As soon as it crossed below the 30 line, you are having a buy signal. So how many buy signals do you have on the screen there?
That's not the
How many buy signal? Let's go to online. Let's go to Nasir. Hello, Flasher.
Sorry, sir.
Hello?
Hello, sorry about that, sir.
Okay, can you give us an answer? How many buy signal do you have on the screen? Can you see the screen?
Yes, sir, I can see the screen.
Okay, so how many buy signal do we have?
Can't say because the screen is too
It's too
too tiny, sir.
No problem, no problem.
Yes, sir.
So let's get somebody
Yes,
here
sir.
that will assist. Can somebody make assistance? How many buy signal do we have on the screen there? One. Yes. It's only one area that it come and crossed below the 30 line. So by the time it crossed above the 70, you're having a sell. Observe now and tell us how many sell signal do you have? We have two. Good. So we move. If RSI is above 70, then there is a sell signal. If, however, RSI is below 30, then there is what? A buy signal. Some people use 80 and 20. If you are using 80 and 20, it must be below 80. That would be the sell. And it must be above 20. That would be the buy. But if you are using 70, 30, it must be below 30 to get a buy and above 70 to get a sell. Next. Now let's take a look at this screen. We go to Mansoor. How many buy signal do we have?
Two.
Agreed? Why do you say there are two? Why do you say there are two?
Because they are not up to 30. They are below 30.
Good. They cross below 30. We go to Sagir. How many cell signal do we have?
They have no sense.
No cell signal. Why?
Because there is no way it crosses.
Good. Next. Remember that the signal of the relative strength index are the most reliable. Mark this word. Are the most reliable when they correspond to a long-term trend. So if you are looking for reliability and you are a long-term trader, better go for RSI. At this stage, I start expecting you to start zeroing your mind to take your favorite tool, because the tools are coming and going. You have to capture the one that you want to marry and make her your bride. Yes. So we move. So any question on RSI? We are moving to stochastics. If there is no question on RSI.
Yes, like,
Yes.
The RSI is when the line is below 30, it's below 30 line.
Yes.
And does it has any limit, like for stochastic?
No, there is no
Below
limit
30?
for RSI.
Okay.
Like
Once it
stochastics,
is-
once it reaches 20, you will not buy.
Okay.
But in RSI, it's not like that.
Okay.
Any other question, RSI? Abakar, are you with us?
Yes, sir.
Because I didn't hear you asking anything. That's why I'm doubting whether you are not with us.
I'm just questioning.
Okay. So stochastic. The stochastic indicator was developed by George C. Lane at the end of the 1950s and is actively used among traders all over the world ever since. It evaluates the market momentum and compares the closing price to a price over a certain period of time. The ideas behind the indicator is that in the bullish market, please somebody should write the tools we have done so that when we come to practicalize, we are taking RSI, what again? That we have not practicalized them. Is it only RSI? So write down RSI and you now write down stochastic so that when we come to do practical, we do all for all of them. RSI, then you write stochastics. So we continue. It evaluates the market momentum and compares the closing price to a price over a certain period of time. The idea behind the indicator is that in the bullish market, price will close to the high ones. And in the bearish market, price close to the low ones. So now let's see stochastic. Can you see it? There are lines also. Line on top and line below. If stochastic is above 70, then there is a sell signal. So it must be above 70 and below 80. Then when it is below 30, above 20, you have a buy signal. So let's look at the screen here. Let's try and look at the screen. Are we all there?
Yes.
Good. Let's go to online. Nasir, are you there?
Yes.
Okay.
Yes, I am.
How many buy signal can you see on the screen? They are too tiny, isn't it?
My eyes can't read it.
Okay.
Let me try.
Okay, try.
Yes,
Try,
sir.
Mansour.
There are three numbers.
Okay, there are three. You can see them. They were even cycled on the bottom. Like the first one is here where it crossed below the 30. The second one is somewhere here. And the third one is somewhere here. So how many cell signal can we see on the screen? Only one, which is somewhere here. Are we clear?
Very clear.
And the difference between RSI and stochastics, RSI is showing one market. Stochastic is showing you the fast and the slow markets. That's the difference. Good.
RSI is showing one market.
Yes, only one market momentum line.
While the stochastic
It's showing the slow and the fast. So we move. Things to note about stochastics. Above 20 and below 30 is right time to buy. Below 80 and above 70 is the right time to sell. Below 20 is an abnormal sharp price fall. Try not to buy at that position. Above 80 is abnormal price rise. Sell before you reach that point. Then the fast and the slow market, they are shown on your stochastics. Anywhere they join, there will be a reversal of the market position. If they are coming down, which is bearish, and they join, they will start going up, which is bullish. If they are going up, which is bullish, and they join, they will start coming down, which is bearish. So anywhere the slow and the fast join, there will be a market position reversal. Next slide. The stochastic oscillator is very powerful tool of technical analysis. It has several purposes and can be the basis of a good trading system. That is why in this, our Forex class at Gwani Software is the first tool you learn. We always give you stochastic as first, so that you start your trading with it first. So any question on stochastic? Online, do we have question on stochastic? So, we move. My favorite tool, alligator. Yes. I don't know whether any of us have ever seen an alligator.
You see?
Have you ever seen an alligator?
No.
Alligator looks exactly like crocodile. The difference is that alligator raises its belly as it is moving. Crocodile crawl with its belly on the ground. That's their major differences. So in Africa here, we usually have crocodile. We don't have alligator. But outside Africa, alligator are so rampant, particularly in America. So this is a tool. When you are using alligator, you are going hunting, and you release your alligator to get an animal for you. Normally, when the alligator sees the animal, it will run after the animal. Then it will open its mouth, and then when it closes, it has got hold of the animal. The animal will try to struggle, either to escape or to die in the mouth of the alligator. And the alligator will continue to close the mouth until the animal is dead. When the animal dies, what will happen when you come? The alligator will open the mouth for you to pick. So when the alligator close mouth, you have a buy signal. When it open mouth, you sell. It close mouth to hold the animal for you. When it open, you take your animal and go with your glory. You see?
When you are alive.
When you are?
When you are a lion.
Okay.
Assalamu
Alligator
alaikum.
is an indicator developed by Bill
Assalamu
Williams.
alaikum.
Assalamu alaikum. Santraki.
Alaikum salam to sir.
Now, you are welcome.
Sir, thank you, sir. I've been with you in YouTube. I want to ask a question. I don't know whether I can take us back a little.
No problem. No problem.
Sir, the difference between fast market and slow market.
Okay. He is asking a question, what differentiates the slow and the fast market, which is usually shown by stochastic. So what stochastic actually did is looking at when prices are going in a volatile manner, when the market is taking less time to have changes. So stochastic will predict that this is how the market will move if it is going very fast. Normally you will see it as, is it black line or red line by default? Fatima, is it black or red by default, the past market? The black. Then the slow market is a simulation when the market is going very slow. Changes are coming over a long period of time. So stochastic can simulate on one item how will it look like when the market is fast, and on slow item how will the market look like when it is slow. So this simulation were just some mathematical model that stochastic compute and predict how it will be. That is what we call the slow and then the fast market. The slow market usually red, the fast market black. Hello, Santraki.
Hello, sir. Yes.
Yes.
So can I ask another question, sir?
Yes, carry on.
Sir, why are we having conflict between different tools?
Okay.
Like sometimes you'll find out that stochastic shows this thing, while
Okay.
candlestick is showing something different.
Okay. Yes, it's a very good question. He said, why are some tools giving us contradictory result? Or sometimes a tool and a candlestick signal will give us contradictory result. Yes. Actually, it happens that way. When the military are going for a battle, they will carry gun, isn't it? But are all guns the same? They are not the same. They differ, some of them, in terms of the bullets they have. Sometimes in terms of the speed they have. Sometimes in terms of the weight of the bullet. Sometimes in the time of the weight of the whole gun. Sometimes in how fast somebody can operate the gun. So all this will make the guns not to shoot at the same time. You are using this gun, it may shoot at a later time. This one will shoot at another time. It's the same thing with those tools. Each of the tools there is how they used to get their own signal, how they used to give the signal, and how they used to correct errors in the signal. And that is why in this particular material we are coming to, when we are going to take all the tools and now look at all the tools with the aim of assisting traders to know which one to use and at which time are they to use it. So they cannot give you the same, and some of them are even not stand-alone tools, meaning there are some signals they will give that they are not genuine. Either the signal come too early or the signal come too late. That's the common errors in those tools. Maybe you want to get a buy signal, tool A will give you the signal by 9 a.m. while tool B will tell you there is no any signal there. 30 minutes after, tool B will give you its own signal. Another minute again, tool C will give you its own signal. So sometimes timing also is the reason why the signal are not the same. And sometimes the reliability of the tools. For instance now, stochastic is very fast in giving signal. It can give you a signal even if the signal is not yet at hand. That's mean a signal to come in 3 minutes, stochastic will give you. But if you take MACD, no, MACD will not do that. MACD will wait until the signal has come before it will give you. And that is why MACD used to correct stochastic. Are we getting it?
Yes.
So they cannot all go at the same time. And you remember I mentioned something when we are taking Bollinger Band, that sometimes tools will confuse you. Where you're having that confusion, Bollinger Band will come and save you. This tool tell you go to the right. This one tell you go to the left. This one says stand where you are. So you go for Bollinger Band so that you now see other traders, what are they doing? And it will guide you. Yes, your lifeline. 50-50, yes. So I don't know, Santraki, whether you get it?
Yes, I got it, sir. Thank you very much, sir.
You're welcome. Do you have any other question?
But your screen is the screen is blocked, sir, in
YouTube.
Skype.
Okay, on Skype
No,
it's blue.
Skype.
Okay, but on YouTube is it clear?
Yeah, I don't. It's, before I left, it's clear.
Okay. So let me see what I can do to
Yes.
the Skype. Our Skype today is complaining that our network is too slow for Skype.
Okay.
It's complaining that we're having a poor network. In fact, it's to be recommended that we switch to audio, but we leave it as video. Possibly it's the
Okay,
network
okay.
today not good for Skype. But on the OBS studio, I'm seeing it okay, and it's from the OBS that is going to our YouTube. Okay, so any other question? Do we have questions? Okay, we continue with the alligator. Its purpose is to identify a trend and its direction, then to filter good out of bad signal. The indicator is having 3 moving averages, the alligator, and we give them a name. The first moving average, I will not take us technically into the mathematics, because my aim is not for you to learn maths, it's for you to learn Forex. So I will forget the technical explanation and just give you the Forex explanation. The first one is called the alligator's jaw. You know the jaw of the alligator, mukamuki. I think that is jaw in Hausa. We can all speak Hausa. Mukamuki, we know mukamuki. So mukamukin kada, that's the jaw. And he is having a blue line. The blue line is the jaw. Then we have the teeth. Hakora. The teeth are in the red color. Then we have the lips, lapansa. They are in green. So normally the animal will come in contact with these 3 before it will die. It will come in contact with the lips first, come in contact with the teeth, and experience the strength of the jaw. So it's the jaw, the teeth, and the leaves that come together to finish the animal. So it is these 3 we are going to look at to know whether the crocodile or the alligator has opened its own mouth or it closed its mouth. Next. It's still showing me the previous slides. Maybe is this the same thing? No, how? Oh, you are. Go to previous. Okay, I can see it now. So you write down the another tool, alligator, among the tools we are going to take some practicals. Alligator. Now take a look. You will see the candlesticks, and you can see the alligator represented by those 3 lines. By the blue line, the red line, and the green line. These are the representation of an alligator. You can see the leaves, which is which color? And then you can see the teeth. Then you can see the jaw. Good. That is the representation of the alligator. And you will see it moving around the candlesticks. It is on the candlestick that animals are hidden. Are we getting it? And it is going there to hunt the animals. Next slide. Okay, when the jaw, the teeth, and the lips are intertwined, that means they just join together or they are intertwining. If they are intertwined, it means the alligator is sleeping. And when the alligator is sleeping, you too can sleep. Nothing is happening in the market. There is nothing in the market that will attract your attention. When the alligator sleeps, do not trade because there is nothing you will get. Just go and sleep too. The longer it sleeps, the hungrier it becomes when it awake. So as soon as it wake up from a sleep, it is too hungry that it is going to look for an animal. Alligator opens its jaw. Whenever it opens its mouth, it is time to sell. Whenever it closes its mouth, it is time to buy. Are we getting it?
Yes.
Because to get the animal for you, you buy the animal. And when the animal dies, it opens so that you take the glory. When it wakes from long sleep, it opens its mouth and get ready to take a big bite of the market. And it is time to trade. The alligator will drive the price away and offer a decent profit to a trader. Having eaten enough, the alligator goes back to sleep. So it is time you take your profits. Next slide. If price is above alligator's mouth, it indicates there is a support. And you already know what is a support. So whenever the current price you will see it highlighted in blue. So if the current price is above the alligator, then you are having a support. Alligator sleeps if there is no support or resistance. And if current price is below the alligator, you are having a resistance. Alligator is awake if there is a support or there is a resistance. And if they are not above the alligator, not below, the alligator simply goes to sleep. Let's take a look. Let's take a look. What you will observe, if you are looking for a buy signal, the candlestick will come below the alligator. As they are below the alligator, you now observe where the leaves, the teeth, and the jaw join together. Then you have a buy signal. And if the candlesticks are above the alligator, you also look for where the jaw, the leaf, and the teeth join, and you're having a sell. At the beginning of what you have on the screen, the candlesticks are above the alligator. True or false? True. So when you follow, you will see the green and the red join first. As you move down, the red and the blue join. You move further, the green and the red join. So at this point, you have all the three join. And that is why it is written sell signal at that point. Are we getting it? Now when you come down here, you will see candlesticks are below the alligator. So from that point, you will look at where the three join, which is somewhere here. And then you have a buy. Are you getting it? Good. Next slide. Alligator opens mouth where price are above its mouth, and suddenly its jaws, teeth, and leaves join. Remember, when current price is above the alligator, what are you having? Is it support or resistance?
When the
Current price above the alligator. Good. And it close mouth when price are below its mouth and suddenly jaws, teeth, and leaves, as I explained earlier. Good. Now let's take a look at here. Do you agree that it's a buy signal we have there? Why do you agree? Let's go to Mamana that is here. Do you agree? Let's go to Abakar. Yes. You say? You have to come closer to them. Aha, Mama said, Dama, you are not. So, Mansoor. Abba. Okay, Sagir.
Yes. The reason why we have Buy Signal is that the three-line join where the signal is showing us Buy Signal.
You say where they what?
Where the candlestick leave the lines. Both the three lines join where the candlestick also join
Okay, Fatima, can you add to what Sagir is saying?
The candlestick are above and the red and green.
Are they above?
Yes.
They are below.
Above the alligator.
They are below the alligator. Look at it very well.
Oh,
They are below the
they are
alligator.
below the alligator.
And
And
then
the red and blue
join
join.
and
Then blue and green
join.
join.
Then there must be another join.
We need more clarification.
Red and
Blue join.
blue.
That's a buy. The candlestick must be below the alligator. And then the three to join thereafter. You have a buy. Mansoor, are you talking? You say?
I need more clarification on this one.
Okay. Look at the candlestick. Are they not below? Immediately when they are below, you look for where the three will join, either at once or separately.
Okay.
At what exactly point?
Show him. Okay. Go. Next slide. The alligator is a ready-to-use trading system that can be accompanied by other analytical tools for greater precision in trading. Me is my favorite tool. I combine it with moving average. Sometimes I will use my moving average to clarify things. But I'm not saying it must be your favorite. Choose out of a tool that is working for you. Next slide. Okay, now we are finished with alligator. We are going to another tool. You write it down. A room. Yes. A room. This one is a little too technical, and that is why all the previous class I didn't find any trader that take this one as a favorite tool. It's too technical. Traders don't find it easy.
Also, this tool is not in the formula.
It's not in what? Yes, you don't have it in form until you are using laptop. I think this is something with alligator. So let's take a room. Identify trend change in the price of an asset, as well as the strength of that trend. The indicator is having two lines. You remember stochastic is having the two momentum line, the past market and the slow. But for a rune, the two lines are called a rune up and a rune down. That's the two lines. And normally they also take either red and green color, or you can change the color. But by default, go with red and green. The Arun up line, it measures the strength of the uptrend. It measures the candlestick going up, price going up. And the Arun down measure the candlesticks coming down and the price falling. The Arun indicator was developed by Stochastic in 1995. It's an Indian man, Indian trader. The Arun up and the Arun down lines fluctuate between 0 and 100. That's how they fluctuate, between 0 and 100. With values close to 100 indicating a strong trend. If Arun up is going closer to 100, what is it telling you? That prices are going up. If Arun down is going closer to 100, it's telling you that prices are going down. And if Arun up is coming closer to 0, it's telling you what? Prices are going down also. If Arun down is coming closer to 0, it's telling you price is going up. That's the basis of Arun. If you understand this, Shikena, Arun will not be difficult to you. But once you don't get this point, Arun will be very difficult for you to use. Just understand the 0 and the 100. When Arun up comes closer to any of these two, what does it mean? When Arun down comes closer to any of these two, what does it mean? Are we clear? Good. Next slide. Okay, let's look at it here. You can see the Arun indicator on the bottom. Look at the lines, you can see the green and the red. One of them is the Arun up, the other one is the Arun down. Can you see the 0 line? Can you see the 100 line? You will see them fluctuating, going to 100, coming to 0, going and going, and they are forming zigzag. Clear?
Yes.
Good.
And the green line is the Arun up, huh?
And most likely the green may be the Arun up, and the red may be the Arun down. So, next slide. It's not shown in my own. Aha. Crossovers. What we call a crossover is where the Arun up and Arun down cross each other as they are moving. We call it a crossover. Crossover can signal entry or exit. Entry means what? Buy. Exit means sell. Now, up crossing from above down is a signal to buy. Up crossing down from above is a signal to buy. Down crossing below up. When both indicators are 50, it can signal that the price is consolidating. Nothing serious is happening in the market. And for alligator, it will sleep at that point. The crossover of the Arun up and Arun down indicate a reversal in trend, just like stochastic. If the Arun up is coming down, Arun up is going up, and they cross, they will change direction. Whenever they cross, a direction will change. The Arun indicator may at times signal a good entry or exit, but other time it will provide poor or false signal. As I just told Santraki, that some of the tools are not standalone. They can give you signal too early or too late. So Arun is not a standalone tool like stochastics. When you are using Arun, you need another tool to be confirming, because it can give you fake buy signal, fake sell signal.
Yes.
Good. Now let's take a look. Look at the arrow. There is an arrow indicating somewhere. You have an Arun up. Can you see the green line? Coming from above. Then it joined the Arun down. And what is written there? A crossover. And that gives you a buy signal. The error up coming from up joining with down, you have your buy signal. Are we clear?
Yes.
And if you notice, from that time they join, the market start going up, giving you a bullish trend. And that's why it's a buy signal. Market start going up. Are we together? Good. Let's move. Good. Now let's take a look at here. Look at another join here. What do we have? A rune down bar. A rune down. Joining with a rune up from above. Is it?
Yes, sir.
So what do we have there? Do you have a signal there?
We have a buy signal.
A reversing effect at this point.
Where it crosses.
Yes, look at them where they crosses. Look at the rune down is on top, but after the join, the rune down continue to be below. Look at the rune up is below. Then after this join, which is shown by an arrow, it start going up. That's a reversal. Can you see it?
No, we cannot.
Look at the red arrow. It's showing you where they join.
Okay.
A rune up is coming from where? Before it was up.
Yes.
After the join, does it continue to go up?
No.
It goes down. That's the reversal. Look at a rune down before the join. Where is it? Down. After the join, where does it go? Up. A reversal. Are we clear? Good. Top. Next slide. Is there anything on this? It's showing empty slide. My screen is just showing empty. It's not showing the items there. Go to previous.
Only tag display. For the rest.
Look at my own. What I'm seeing.
It's the same thing we buy Alpha today.
What happened?
Only one. Which slide?
But this is the correct one.
You're welcome.
Oh, it's from how you collect. And your own is more clear now. Okay. So this one we're not seeing anything, but it's showing us some points. And it's very important we see that one.
Then we should just gather here on this.
What of the online? What would they gather? So it's showing us some buy and sell signal. If you are able to go through the slide, please. That's why I say try and download it from our class here. It's already in the class. When you join the class, you will see the slide. Download it. Let's move to the next slide. Are you in next slide?
Yes.
It's not. It's not. Okay. Things to note about a rune. False entry or exit signal may occur due to nature of a rune as it look at the back and not the picture. Can you see the reason? It gives you the signal too late. It has already passed before it will give you. Making signal to come late. And when you take this decision, you are taking it too late. It works best if combined with predictive tool like Ichimoku Cloud or Fibonacci. So if you want to use a rune, please combine it with either Fibonacci or Ichimoku Clouds. Are we clear?
Yes.
Next. Okay. Now the next thing we are going to learn, all the previous class have not learned it. It's newly introduced in this class. On this class we start learning it. All the former traders have not learned this one. And it's called the Random Walk Index, RWI. Write it down. The Random Walk Index, RWI. Now, this tool, it forecasts the direction of prices through the study of past market data, primarily price and volume, based on assumption that market participants take full account of any information contained in past price movements. That past price trends tell us about current price or possible future price. So random walk index relies so much on the past price that from our past price we can see something regarding current price. We can even see the future price. Is it not true? When you look at price of rice for the past 3 years, you can predict next year how much will you buy rice. So that is the philosophy of random walk index. Okay, we have done that one. Next slide. Good. Look at the random walk index. It has been casted on the candlestick. Look at it below. The red line is showing the strength of the downward price, and the blue line is showing the strength of the upward trend. Similar to stochastic and Arun, it's having two lines, blue and red. And we say the red is showing the strength of the down price, and then the blue, the upward one. Then we have level 0 to 3. You can see those labels 0 to 3. If both lines move around 1, both prices are random. That means the tendency to go high and tendency to go low are equal. The market is not pushing except toward one direction. If the two lines are going around 1, if any of the line is above 2 heading to 3, is pushing price to that direction. So if we have the red line above 2 going to 3, prices will fall down. The market will become bearish. If we have the blue line above 2 going toward 3, then we are expecting prices to go up, and we may have a bullish position. Next slide. Blue line going up indicates what? A bullish position. Red line going market. Buy signal emerge. You have a buy signal when the blue line is above 1.5. When the blue line is above 1.5 and the red line is below 1, you have a buy signal. Are we getting it? The blue line must be what? Above 1.5. And the red line must be what? Below 1 before you have a buy signal. You have a sell signal if the red line is above 1.5 line and the blue one is below 1. That is when you have a sell signal. Remember, you can change the color from blue and red to any color of your choice. But where you do not change, the default will go red and blue. RWI lags after giving signal and is slow. So because it's slow, it's not a standalone tool. You are required to combine it with moving average for greater precision. Now let's take a look at it here. Look at the value of the red line is indicated in a red square, and the value of the blue line is indicated in the blue square. So I want you to read, what is the red line value? 2. What of the blue? Do you have a buy or sell signal? Remember the buy and sell signal. Have you written it down? You have not.
Yes, we have a buy signal.
When do you have a buy signal?
When the blue line is above 1.5.
And what is the value of blue now?
2
2. Good. And then what of the value of red?
is 1.
Okay, you have a buy signal that has already occurred because the red must be below 1.
Yes.
But right now it has already reached 1. Meaning buy signal has happened some days ago. But some people can still buy at this stage when it is 2 and 1. Next slide. It attempts to predict zero line in the middle. Above the line is positive and below is negative. Buy signal emerge when swing index. Okay, sorry, we enter another 2. Sorry, we are in swing index now. We finish with RWI. Any question RWI? Any question RWI? I think we still have 2 more or 3 more tools. 2 or 3 I've forgotten. So can we take them before the break, or we go for break and come back? Okay. Look. You say? Amana, what do you say?
She said we take it.
You say we should take them back? We should take them? Talk.
It's good we come back later. We should capture the
But now we still have time.
When we come back? We have before the break, that's what I'm saying. At least we have 10 minutes before prayer will start. Have you?
It's alright.
Is it? So let's take another tool called the swing index. This one too is a new tool. The previous traders, they were not taught this tool. So your class is the first to be taught the swing index. Now swing index, it attempts to predict future short-time price action. There is a zero line in the middle. Above the zero line is a positive, and below the zero line is negative. Swing index will give you a buy signal when it crossed above the zero line, going into positive. You have a buy signal. Sell signal is shown when it crosses the zero line going into negative. You have sell. That one is straightforward swing index. As soon as it enters into positive, you have a buy. As soon as it enters negative, you have a sell. Next slide. Take a look at it. Look at swing index. Can you see it? A line. It's just one line. And then we have the zero line. Can you see where we have buy? As soon as it crosses the zero going up, you have a buy. As soon as it crossed the zero coming down, you have a sell. Can you see them? Sell, buy, sell, buy, sell, buy. They are all coming. Clear? That one is a straightforward tool. No any color. So we move. When the swing index crossed over zero, then a trader may expect a short-term price movement upward. When the swing index crossed below zero, then a trader may expect short-term price movement downward. That's what he's saying. As soon as it crossed zero, you will expect a price rise for a short period of time. And as soon as it crossed zero downward, you will experience a price fall for a short period of time. And look at it there as it is being applied. in our eToro account. Can you see it moving within the zero line? Good. Next slide. Now take a look at it here. And the last one is giving you the value of the lax swing index, which is in the black square. What is the value there?
190.
190, meaning you have already bought that thing for long. Because once it crosses zero at 1, you have a buy signal. It's now at 190. You have bought it many times ago and it has stayed long with you. Next slide. Ultimate oscillator. So I think we leave this one. When we come back, we continue from the next two, the ultimate oscillator. Let's have 10-minute break. Then when we come back, we continue, inshallah.